You are listening to The Michael Lodge Show. Wealth, business, and taxes. Oh, yeah, and some politics. Let's get started.
Day 2 of 2021. It's a great day. Well, at least here in South Florida, it's a beautiful day. We've got the sun out. We've got some clouds up in the sky. Don't know if it's going to rain. No one knows on a day-to-day basis in South Florida. But it's a good day. One, because we're in 2021, and we have stopped forgetting about 2020, because we're in control now, and you and I are going to do great things over the next 12 months. We have a lot to get done. I love to be busy, and I love knowing that I've got a whole bunch of possibilities laying open for me that I can explore and do things with and make successes. Listen, I'm going to talk today because we're getting into the tax time. Listen, we start January 1st. January 2nd is when so January 1st is really kind of a day off. January 2nd is now we have to think about our 2020 tax return. And so we're going to talk about several tax issues on the 2020 tax return over the next few days. So get ready, because it's tax time now. April 15th is the deadline. So let's get ready. So today the conversation is going to be about cryptocurrency, Bitcoin. Now, I have to preface this because I have a bias here. And I have to express my bias. One, I hate cryptocurrency. I hate Bitcoin. I get bombarded on Instagram and Facebook and Twitter on people trying to get me involved in Bitcoin and cryptocurrency. And I'm going to tell you right now, if you try to do it to me, you're going to be blocked. Because I get dozens and dozens on a daily basis of people saying how much money they've made. I put $600 in and now I have $3,000. Well, listen, boys and girls. I don't like risk when it comes to investment. Real estate, I know about. Okay? Real estate, I am confident about. I know what's going on in real estate and what the markets are doing. I'm confident in that type of an investment. Other investments on my 401k plans, on my retirement plans, I know what's happening, so I can control that. Unfortunately, with crypto, it's an unregulated financial instrument. It's unregulated. However, this is the good thing about this whole thing is that when there's risk, I stay away from it. And when it's not regulated, because, listen, when you're putting money into an investment, there's got to be some regulations to protect you, the consumer. Crypto has no regulations that's going to protect you as a consumer of investing into crypto. There are none out there. Now, I'll preface that by saying that I did hear a case on crypto when it was used in business, in payment. So in that sort of situation, the law kind of has more to say on payments and how it's going to be used in business and as a currency. So I did hear that, and it ended up into being a fraud type situation. So I had to back out of it because I do not handle fraud in mediation, especially business mediation. But let's talk about crypto, because since I'm a tax guy and I go to all these schools and everything else to keep my license up to date, I might as well use it and share it with you, right? So I preface it by saying I hate crypto. I don't like crypto I feel it's a risk. There's no regulation on it. However, there are tax consequences. So even though there's no government body that's regulating cryptocurrency, there are tax agencies who are regulating cryptocurrency, and you have to report it. So we're going to talk just a little bit today, because I don't want to put you to sleep on a Saturday, but we're going to talk a little bit about how you report your crypto investment or activity on your 2021 tax return. Okay? So for right now, if you are in the process of trading, trading crypto becomes a taxable event. Remember those words, taxable event. Which means that a taxable event is if you are selling or trading or disposing of your crypto. You need to calculate the gain or loss incurred from the transaction, just like you would a stock transaction. That is the most important thing. To understand that your crypto activity is a taxable event because you're trading it. Let's use an example, okay? Let's choose the name Becky. Okay, Becky? So Becky purchased one Bitcoin for $10,000 on July 1st. 2 months later, she traded 0.5 of this Bitcoin for 50 ETH. The fair market value of 15 ETH at the time of the trade was $6,000. Trading Bitcoin for ETH is a taxable event, so Becky needs to calculate and report her gain or loss on her transaction. Becky's cost basis in her 0.5 BTH is $5,000. Okay? Put that on a piece of paper. $5,000. That was her cost basis. The fair market value of the 15 ETH, or BTH, or ETH, I mean, is $6,000. So, using the equation of fair market value minus cost equals gain or loss. So there is a $1,000 gain on Becky's form 8949. That's the first form that you're going to use if you're trading Bitcoin or cryptocurrency. The gain or the loss goes on your form, IRS form 8949, that then gets over to Schedule D. So you need to calculate that capital gain or loss. That's the first thing that you do. So then you have to complete the IRS form 8949. Once you have calculated the gain or loss from each of your cryptocurrency taxable events, I love those two words, you can use information to fill out your form 8949. So let's talk about what the IRS 8949 is used for. It's used for reporting the sales and disposals, of capital assets. So cryptocurrency being traded is a taxable event because it is a what? Capital asset. So let's talk about some examples of capital assets, which include stocks and bonds, and yes, it also includes cryptocurrencies. So for each taxable transaction, you have to complete the following on 8949, okay? A description of the property you sold, cryptocurrency, date you originally acquired the property, the capital asset, date you sold or disposed of the property, capital asset, proceeds from the sale, the fair market value, cost basis in the property, gain or loss. So you're reporting out on 8949. Go to Google, look up 8949, and you'll see exactly what it is. And if you have traded in stocks before, you'll know what it is. Then the totals from the 8949, it goes directly over to Schedule D, which is for capital gains or losses. And that's where you report it. Once your 8949 is filled out, take your total net gain or net loss from 8949 and include it on Schedule D. That's where it has to flow over to. Schedule D reports your overall capital gains and losses from all sources in addition to your short and long-term gains that come from 8949 and your crypto activity. Losing my voice here. So other lines reported on the Schedule D include your K1s. Okay, so if you're in a LLC or an S Corp, business, estates, and trusts, and you get a K1, that's where that also gets reported, is on your Schedule D. So your cryptocurrency taxable event gets reported there, and your stocks and everything else get reported there, and it's from estates and trusts, and you get a K1 from a LLC or an S Corp or an estate, it goes there also. Okay? So in certain scenarios, though, cryptocurrency is earned in the form of ordinary income and not capital gains. And so now we have the situation where some of you are conducting business. You have a small business. You are trading, or you are maybe you're an accountant and you receive cryptocurrency as an income. It has to be reported. So where does it go? Schedule C, because it's income. So it becomes a taxable event again because you are self-employed. You're doing a Schedule C. So you have your income, which is all of your cash transactions, your credit card transactions, and your cryptocurrency transactions all get reported in your income line. And then all of the expenses of what you do on how you conduct your business gets deducted from the total income. So remember, if you are accepting cryptocurrency as a payment-based form, a taxable event occurs, and that becomes taxable income on your Schedule C. Now, there are other ways that you're doing this also. So in certain scenarios, cryptocurrency is earned in the form of ordinary income and not capital gains. This includes cryptocurrency received in mining, staking, or earned interest. Many individuals do not have any sort of crypto income, as they have just been speculating on price and buying, selling and trading, or exchanges. But for those who have been earning crypto, this income needs to be included within your tax return. Schedule 1 is another place to put it. Schedule C, if your income, if you have a business, small business where you're accepting crypto, has to be reported there. If you're trading, it has to be reported on 8949 and Schedule D. So, it's amazing, isn't it? A lot of you, now I have to tell you this, okay? A lot of you I know are not reporting your cryptocurrency. But if you're getting a 1099 of any sort, you have to remember that 1099 is digitally reported to the Internal Revenue Service. When your tax return goes in, the computer automatically links it up. And at some point in time, you're going to get a letter where it will tell you you have not reported income. You've underreported your income, and they'll make an adjustment. It might not happen today, but it will happen. It might happen 2 years from now, but it will happen. So make sure that if you are a small business, and if you are accepting, or even a big business, if you are accepting cryptocurrency as a payment form, you need to report it as income on your Schedule C. Okay? On your Schedule C. What is Schedule C? profit or loss from business, okay? It used to be called profit or loss from business or profession. But a lot of the professions are now doing LLCs and S Corps and C Corps and everything else. So, but if you are taking it as a form of payment in your sole proprietorship, or even if you have, if you be putting your LLC on your Schedule C, which can be done, that cryptocurrency has got to be in there. You cannot hide it. You've got to report it. To be ethically about it, you have got to report it on your Schedule C. You have got to report it on 8949 and Schedule D. You have got to report it. It is a taxable event. Taxable events that you do not report get caught up with you at some point in time. So those of you, I know many of you out there, because you've talked to me about it, is that you're saying, I'm not going to report it. It's a non-regulated transaction. But unfortunately, the IRS and many states across the United States, in fact, all of those that do taxes, except for Florida and Nevada and Florida, Nevada, Texas, and there's one other one. I can't remember what state it is. Oregon. No, it's not. You know what? I can't. Anyway, I know those three. But if there are states that require for that to be reported also. So, in fact, they've even got different calculations for it. So, at the very end of this whole spiel that I've just given you on cryptocurrency, which I don't believe in, sit down with your tax practitioner or get a tax practitioner and make sure that you are reporting it correctly. Or send it to a tax. If you're doing self-prepared tax returns, have somebody review it before you send it in, before you hit send. Have someone else review it. I do reviews all the time for clients. I'm trying to get out of preparing tax returns. That's my whole goal, because I've been doing it since 1984. But if somebody needs advice and needs someone just to review something, I'll be more than happy to do that. For a fee, but not in cryptocurrency. I don't want any of that stuff. So I hope that kind of answers your questions on how to report your cryptocurrency taxable transactions, okay? You're making money, so it has to be reported. It's not one of those under-the-table deals. Even though it's not regulated by the federal government or by the Treasury Department or by whatever organization is out there in the government, you still have some tax rules that you have to abide by. And the IRS has been very, very diligent on reporting on what types of income is reportable, which constitutes a taxable transaction. I'll use those two words over and over and over again because I want you to truly understand that cryptocurrency trading or selling or using it in business is a taxable transaction, and you have to understand that. So you have to report it. Because if you don't, if it's been reported, as I said before, in a 1099 or other type of instrument, it's going to get caught up with you within the Internal Revenue System. Okay, because those 1099s get automatically transmitted up into the Internal Revenue Service System. So, listen, if you want to do this correctly, follow what I've said. Talk to your tax practitioner, sit down with them, and go over the transactions, because you have to have the begin date, the end date, the cost basis, the sold basis. You have to have all that information, just as if you was trading a stock. Okay? You guys are doing day trading. You know exactly what it means to fill out an 8949. It's one of those things that is so very important that if you don't report it correctly, it will catch up with you. Okay? Go to the IRS website, pull up the information on cryptocurrency, pull up the Form 8949, pull up the Form Schedule D, and you will see all the requirements that are needed. But the best bet, if you're doing a lot of transactions and if you're accepting it as business income, make sure that you've included in your income and make sure that you sit down and talk with your tax practitioner to go over what is needed to do this correctly. I've kind of gone over the basics of it. It's not that difficult, but you need a tax practitioner because you need to be able to calculate the capital gains if you are trading crypto. Schedule C, that's another issue. That's income minus expenses, and just like a normal Schedule C. So when you're doing business or profession calculations, it's just like preparing a financial statement. You have your income, all the sources of income that you're accepting. Then you have all of your expenses on what you're operating the business with. So if you're an accountant, if you're accepting crypto, that's your income. If you have your expenses below that, which is going to be your office space, your phone, your license expenses, your everything that has to do with your business, that gets reported there. And then you have your net income, and that's what you're taxed on, your self-employment tax is based on. Does that answer your question? If it doesn't, just send me an email. Not an email, but a text to 818-252-5682. Again, that's 818-252. If you have a question, if you have a concern, if you have a comment, send it to that text, and I will respond to you. I promise you. If you have a long, drawn out question, send it to our email, which is info@lodge, LODGE-co.com, and we will respond to you. I promise you. If I don't know the answer, I will find the answer and get it to you. That is my promise to you. Okay, so that covers crypto. It's a taxable transaction. Always remember those two words. My crypto that I just invested $1 in is a taxable transaction. Think about it. Do it right. Be in compliance, and you'll be okay. Thank you so much for joining me this morning on the second day of January. I'm very blessed to say that, you know what, I made it into 2021. And that the year has a lot of potential. And I'm going to keep my positive thinking cap on throughout the entire year. I don't care what government tries to do to me, because I know as an American I can fight back if I have to. But I am going to remain positive. And I want each and every single one of you to remain positive too. Focus on what you need to do for your businesses, for your investments. But keep going forward. What happened in 2020 is done. It means nothing to us at the moment, except that we learned a lot. But 2021 means that we keep going forward. So remember, cryptocurrency, taxable transaction. Listen, if you want to know what I do in my day job, go to www.lodge-co.com. If you would like to support my podcast and the content that I provide to you, go to buymeacoffee.com/Michael Lodge, and you can make a donation there. You can help us out with our daily podcast expenses. I would greatly appreciate it. It's not a priority. It's not something that you have to do. But do it out of your heart if you like what I am presenting to you in my content. If you have any subject that you would like for me to go over or talk about, just send me a text at 818-252-5682, and I will get to that subject that you would like to have covered. And we'll go from there. So today, January 2, let's move forward. God bless everyone, and I'm glad that you listened to me this morning. I'm going to try to do a podcast every single day, so help me out here. Give me some subject matter, and I will cover it for you. This is Mike Lodge. Talk with you soon. Bye-bye. This podcast is produced by Michael Lodge, fully focused on content. Let's move forward. January 2. God bless. Bye-bye.